Good morning, everybody, and welcome back to the Morningstar Investment Conference. It's great to be back here in Mumbai. I was here 2 years ago for those of you who attended that conference. I think we had it at the Hyatt 2 years ago, and as Aditya mentioned, we've outgrown that space, so it's wonderful to be in this bigger space. How many of you are at your first Morningstar Investment Conference? A number of you. And how many of you have been here maybe more than 2 or 3 times? So quite a few of you. So thank you. Whether it's your first time here, or whether you've been here many times before, we appreciate the fact that you take time out of your schedule to be here. And obviously, from my perspective, it's a very exciting time to be a participant in the Indian markets, whether you're investing in the markets directly, or whether, like many of you, you're providing advice to individuals who are investing in the market. And my comments today are largely going to be focused on advice and the future of advice. And obviously that's something that's at the center of what all of you do, and something that's on everybody's minds because of what's been going on. In fact, I turned on ET Now this morning, and there was a lot of discussion about the recent moves that SEBI is making as it pertains to how commissions may or may not work going forward after April 1st. So we'll spend some time talking about that. But again, thank you for being here. And without further ado, let's jump in. So as Aditya said, this is a special year for us in many ways. It's 25 years since the first private mutual fund was launched in India. I was born in India, I grew up in India, and I still remember my father investing in the UTI schemes back in the old days. And some of you who recall that, you never used to know what your NAV was, maybe once a week, once a month. And even then, it was a little bit like guesswork, whether the NAV was real or not. I remember my father always waiting to kind of get that statement, and look how far things have come. We now have more mutual funds than we do stocks in India. I'm not sure that's a good thing, but that's the place we've gotten to over time. This is also 10 years of Morningstar being in India. And Aditya was one of the early ones to get our business growing here. And how wonderful it is that 10 years later we're here in the largest conference hall venue in Mumbai with 1,300 of you at this conference. So wonderful to have that. And then something I'm very proud of, Morningstar in India now has more than 1,000 team members. And so we have more than 1,000 folks who work at Morningstar, and that too has grown over time. And so we're very excited just about our growth and all the great people in and around Mumbai who are part of the Morningstar team. So you'll see many of them walking around. Feel free to stop them, ask them for any help you need. I think you'll find them to be quite fun and engaging to talk to. Now, I started in Morningstar in 1997. And at that time, Morningstar was a small company. And we were in one market, the US, and we had one office in Chicago. That was headquarters. And our investment conference was largely concentrated at that time in the US. And I remember going to my first ever Morningstar Investment Conference. I still remember it. And Mark Mobius, who's here, was the keynote speaker in Chicago that year. And what I remember from Mark's comments, and I was saying this to him backstage, is that one of the first things he did is he put up a picture of a baby. And he talked about the fact that he had put up this picture of this baby because it reminded him of why he was in this business every day. And that is to help that child achieve whatever the goals were that the parents had determined for that child. And the parents had put the money in Mark's funds. And I thought it was a really good lesson. I've always kind of kept it at the top of my mind because it was really the reason for why I like being a part of this industry as well. Now also, at that conference, at that time, was someone who was maybe a little bit less well known than Mark, a gentleman by the name of Jack Bogle. And in those days, Jack Bogle was kind of thought of as someone who marched on the sidelines. He was a guy who had this concept called index funds that very few people believed in. And they thought that index funds were not real, that you could easily beat them, and that active management was the only way to go. Well, nobody's laughing at Jack Bogle anymore, for sure. He's become the gold standard, not only for thinking about the investor, but for ethics in the industry and how we should all hold ourselves to a high standard. And today, Jack, interestingly, is on a crusade around corporate managements and their responsibilities. And in fact, Mark Mobius, his new firm is very heavily focused on ESG. So we have this interesting juxtaposition at this conference between a legend in active management and the creator of passive management. And along with both of them thinking about their next chapter, which is really around stewardship, which I think is such an important point for all of you here at our conference. But I also like to paint a picture for what's been happening around the world. And I know I've been talking to some journalists since I got to Mumbai a few days ago, and everyone wants to talk about how bad everything is. The markets are down, I feel horrible. But everyone, let's take a step back. If we look at what's happened in the Indian markets and the global markets over the last 3, 5, 10 years, it's a pretty good picture. It's hard to imagine how far we've come and how strong the returns have been. So it's good to have that perspective. It's also the case now that interest rates around the world are starting to move up. After years of seeing interest rates come down, in most markets, interest rates are moving up for one of two reasons. The first reason, predominantly in the US, is because of a strengthening economy. The second reason is more so with economies under duress, where there's real inflation threats, places like Turkey, Argentina, so you're seeing very quick and rapid increases in interest rates. So the overall global economic environment for fixed income as well is headed up. And then you have crude oil, which, as all of us who have gone to a petrol station here and tried to fill up your tank, you know that gas prices have been going up and petrol is much more expensive. And particularly in a place like India, where India is not an oil-producing nation and there's a lot of dependency on the Middle East for oil, it does cause a lot of economic headwinds going forward. And then commodities have done well. Generally speaking, commodities have been on an upward incline, but the rupee has depreciated successively over the last few years. And despite, I think, a relatively rosy picture overall, I think the dollar has been so strong against most major currencies that the rupee has not been able to withstand. So that's a little bit of the background. And if you talk to our analysts and look at their views on global markets today, and you're going to hear this from many of them, I think you'll find an opinion that it's a time when things are not super expensive, they're not super cheap. So it's an okay time to invest, maybe not the best time. But the theme that you're going to hear consistently through this conference and from all our analysts is what it is that there's never been a better time for great advice. And this is important because our conference is called the Morningstar Investment Conference. And so many of you come here to think about investments, but you're all in the business of providing advice. And what I would like to offer to you, all of you who are either getting started as advisors or thinking about wealth management in one form or the other, is that the theme that you should be thinking about is that there's never been a better time for great advice. So moving the focus from investments to advice, and the importance of really focusing on what it means to give great advice. Now, in my mind, and in the way that Morningstar thinks about things, there are three things that drive great advice in the future. One is that advice will be personal. The second is that advice needs to be efficient. And the third is that advice needs to be innovative. Personal, efficient, innovative. And I'm going to spend time on each of these and talk to you about how you might think about that, how you might think about each of these, and how we at Morningstar are going to help you be successful through using each of these. Now, the first of these is, of course, the notion of advice being personal. So what's changed that has allowed advice to start being personalized? It's really technology, right? In the past, if you wanted to build a large-scale solution and you wanted to customize it for all your clients, that's probably not the easiest thing to be able to have done. And now you're going to have that opportunity. So what I want to start by talking about in this regard, and take a minute to look at this data. We did a survey in the United States where we talked to average investors. And we asked them, what is it that you value from your advisor? And then we asked advisors, what do you think your clients value from you? And take a minute and look at this slide. And for those of you who want to get some of these slides, they're all in the conference app. So don't worry about taking pictures. You can pull them directly from the conference app. But you'll see there are some very, very big differences in terms of what you think is important and what your clients potentially think is important. And this is very pertinent because from the perspective of starting to personalize advice, it's really, really important that you start thinking about diminishing that delta between your clients and yourself. So it's very interesting. Among the things that have the biggest delta: tax consequences, maximizing returns, tax structures, whether you're approachable or not. These kinds of things really do matter. And I think it's really, really interesting to see some of the differences that crop up. So one thing we think you can start to bridge some of this divide and start to personalize the way you build portfolios is through what's called environmental, social, and governance investing. And Mark in particular is going to spend more time talking about why some of this is important because it's central to his new firm. And I know in a place like India sometimes when you hear a concept like ESG, it's not uncommon for you to think that's really a Western concept. It doesn't matter here as much. But think about how many of you got out of bed this morning and looked out of your windows and thought maybe the pollution is too high, and that maybe in the next 10 years you want to have an impact on changing how companies are investing and how the environment around you feels. I imagine a lot of you did. I turned on the TV, like I said, and I was looking at NDTV News, and I did this yesterday and I did this today. And the top two stories yesterday and today were about pollution and air quality. You all know it. I'm from Delhi. It's bad, right? And so environmental, social, and governance investing is a way to start taking a stand with your portfolio about the things that matter to you and your clients. And we want to provide you with those tools to be able to do that. And as you can see from this chart, the growth is happening at a breakneck pace. It's still not taken off as much in India and other parts of Asia, but around the world, the growth in investments around ESG is really beginning to take off meaningfully. And we've particularly been focused on what we call our low carbon approach to thinking about ESG. We have more than 70 factors that you as an advisor can sort through and determine which ones matter to your clients. And the point of this is to provide you with data on all the companies that you're investing in and how they stand to do in a world where we start to transition from a high carbon economy to a low carbon economy. And then we have these types of reports that you can use. So the message I want to leave you with on ESG, and I'm sure Mark will say something about this as well, is while ESG as a concept may be in its infancy in many parts of the world, including India, I do believe that globally it's a concept that is starting to land. And I think as you start thinking about how you personalize portfolios, how you differentiate, and how you think about impacting the world that you live in and the environment that you have here, something around this will start becoming very important and resonant to all the clients that you are serving. Now, the second thing I want to talk about is the growing importance of efficiency in the way advice is delivered. I like to tell the story that about 5 or 7 years ago, when there was a new word that showed up, it was called robo-advisor. every financial advisor that I use that word in front of would basically say they're never going to go near a robo-advisor. Every financial advisor assumed it was a threat to what they were going to do. Today, how many of you are thinking, raise your hands, about how you can incorporate a robo-advisor into your practice? Let's be honest. Only one person, a few more? I think more of you are probably thinking about it. Because you have to. The reality is to make advice more efficient and serve your clients at scale, especially for smaller accounts and for bringing along parts of a family that you're just starting to get to know. This becomes a very efficient way to start thinking about how to serve your clients. And I don't want to dwell on robo-advisor, but I brought that up primarily because of the fact that it's just an example of how advice can be more efficient. Now I see one of my slides jumped, so maybe it'll go back or not. But one of the things I wanted to talk about, which Aditya touched on, is that we've launched Morningstar Advisor Workstation here in India. And I'd encourage you, if you're not a user already, to step out to the booths in the back there and take it for a test drive. The thing that I'm most excited about with Advisor Workstation here in India is that it provides you not only with a one-touch capability to run profiles and reports for your clients, but because of our partnership with the Bombay Stock Exchange, you also have the ability to execute the transactions that you want to once you've run the reports with one click. So it's a very comprehensive end-to-end ability to not only generate a report around what you're trying to build for your client, but then to actually bring it to life in a meaningful fashion. So the last thing that I'm going to talk about is innovation in advice and why that's important. Innovation is a word that everyone is throwing around these days. Everybody wants to be innovative. You want to be the next great thing, the next Flipkart. It's very common, but what does innovation look like in advice? Well, for Morningstar, innovation in advice really comes down to how we're thinking about research. So historically, we have invested in hiring analysts and ensuring that analysts do all the work of covering all the securities that are available. But the reality is that you can only hire that many analysts to cover all the securities that are available around the globe. And so we've been using machine learning techniques over the last couple of years to see if we can start to replicate the behaviors that drive our analysts to recommend certain funds, certain stocks, and essentially with that, we've rolled out what's called the Morningstar Quantitative rating for both funds and stocks. And it complements the great work that our analysts are doing already. And this is some of the press around the world that came out after we launched the ratings. And then the important thing to keep in mind is here in India, we're getting ready as well to soon launch the quantitative rating for funds. This will be using our traditional barometer of assigning a gold, silver, or bronze ratings to those funds that we think have the ability to be long-term stewards of capital and provide outperformance. And we're also in the process of continuing to make sure we can extend this capability to stocks as well. So with that, we've actually launched the quantitative investment reports on more than 100,000 global equities, including the entire universe in India. And this will become available to all of you in 2019. So to give you a flavor for what this might look like, I actually pulled two examples of what our quantitative reports show. And so today, our quantitative rating shows that Nestle India is actually not that attractive, largely based on the fact that we believe that the amount of money it's going to have to start spending is going to start increasing to stay as a category leader in several categories that it's involved in, whereas our quantitative rating shows a very positive outlook for exports as a pure play in the transformation of agriculture through technology. And so we're going to have more reports like that available to you, but I thought I'd give you a quick flavor of what's going on. We're also launching what we call our risk model. And the risk model basically allows you to run scenario analysis of different types of situations that might impact a client's portfolio. This will be coming to India in 2019. What you're looking at right now is a scenario where a client has gone in to talk to an advisor and said, can you road test my portfolio for what might happen in a scenario where there is a China-US trade war. And so you're seeing some of the scenarios and hypotheses around that begin to happen. And we think this is a big deal because it allows you, again, to personalize the advice to things that your client cares about. You can do it efficiently at scale, and importantly, it's fairly innovative in the approach that it's taking. And then finally, we're really excited to launch, in partnership with all of you, Morningstar Managed Portfolios. This is a global service that we have available already in the UK, the US, South Africa, and Australia. We're going to be launching it here in India. And if you're interested in learning more about this, my colleague Mick Vandersky will be presenting in more detail about this topic tomorrow. So with all of that said, I'm now going to set it up for what I know all of you are really here for, which is to listen to Mark Mobius. And as I said earlier, my first interaction with Mark was at our conference in 1997 when we had him in Chicago to speak at our conference. And very soon after that presentation, I invested in Templeton Developing Markets myself, and have followed a lot of what Mark has said over the years and the things he's done. And it's funny, today it's commonplace to talk about emerging markets, just as it's commonplace to talk about index funds. And I think the thing that perhaps is sometimes missed is that when Mark began to do all this work, it was not commonplace to talk about emerging markets. So I asked Mark why he's here in India and what are some of the other things he's going to be doing besides being here. And he actually told me he's here because he's trying to convince SEBI to allow him and his new firm to invest in the Indian markets. It turns out Mark was saying to me he was ready to invest, and then he discovered that SEBI needs 6 months before it's going to allow any investor to do that. So Mark is going to work on that while he's here as well. But please join me in welcoming one of the most fantastic emerging market investors, Mark Mobius.